over the past few days, we've definitely seen a drop in Bitcoin. We dropped all the way down to $170,000. Trump has once again announced something about additional tariffs, but it looks like that's already being postponed again. Of course, that put a bit of pressure on us. As always, it's just typical market manipulation by the USA. But what really happened here, I'll explain to you now. And above all, we're currently forming a bullish cross, which in the past has led to a really nice upward trend lasting 15 to 25 weeks. But first, let's talk about what just happened. With this example, we can see how the funding rate has increased over the last 30 days. Everywhere it's yellow, the funding rate was simply quite high. That means more and more leverage was being used here. Of course, that's not so good for the exchanges. The exchanges usually want to push the funding rate down a bit here because in yellow we can clearly see that things were already too over leveraged. We can also see this with the Bitcoin price. We needed a cool down first. That's exactly what we experienced here. Accordingly, a lot of market participants were flushed out here, just as it should be. That's also good on the 3-day chart. Liquidity was picked up down here, and again down here, liquidity was picked up. Then there was a fake out. Many thought, okay, it's going back up again. No, not quite. Even lower, even more liquidity was picked up. Now we're back up here, battling around the liquidity. But there's still quite a bit here. You really have to say, this is really a typical market maker game at the moment, but that's completely normal. It can definitely continue like this. We simply need these liquidations in between. You simply have to liquidate these shorts against the long positions from time to time so that we can really prepare ourselves for the next upward trend. Because you have to admit, over the past few weeks, we've really just kept going here. We had some interim corrections, but they weren't anything too wild. Even this correction that we've seen over the past few days was just 5 or 6%. That's really nothing major. In this regard, I could imagine that in the coming weeks, we might well see a correction of 15 to 20%. Maybe even a short, sharp correction. But what needs to be said here is that at just under $90,000, we have a strong support zone from the mining costs. Currently, the mining costs are around $94,000 in that area. That means we would definitely encounter significant resistance here. Maybe it would look like this. We hit resistance and then we continue to rise. Starting at $94,000, the support zone from the miners begins. Maybe it will drop that low again, but maybe we'll continue to rise directly in the near future. Of course, we can't just keep rising non-stop. That's absolutely clear. But what we see here with Bitcoin is overall very positive. Accordingly, I also believe that in the coming weeks, we will experience another nice strong upward trend because we have a bullish cross here on the MACD. And here in yellow, I've marked for you when this last happened. And here at the first bullish cross, we had a rally that lasted over 3 or 4 months and gained almost 100%. Here we had a bullish cross that was the only negative bullish cross where we saw minus 30%. Here, this bullish cross, we gained over 100% and all of that within 4 or 5 months. So a really strong upward trend followed the bullish cross. Bullish cross, over 100% gain, really massive. Now we're here again at a bullish cross, so it's getting very interesting. Normally, based on timing data in the past, we should see a big breakout here because every time there's a bullish cross, we see an upward trend unless we're in a bear market. That's the only exception. Otherwise, the following weeks are very, very positive. But on the longer time frame, we also have a bullish cross. And here you can clearly see how it was in the past. When we had the bullish cross in 2016, it was over 140%. 2017 over 2,200%. The bull run actually started with the bullish cross. In 2020, it was over 1,100% because that's when the bull run started back then as well. So this overarching bullish cross is now slowly occurring. That's why it's not unusual for us to see another 10, 15. That was often the time when institutional investors bought in again just before we had the big breakout. It's really nice that we're currently building a bullish cross here. From a long-term perspective, this is definitely very, very strong. And in this regard, I also take a very close look at the M2 money supply. As long as we keep getting more capital here, Bitcoin will continue to rise. However, if we do cool off here and see a drop in the M2 money supply, then I definitely expect a larger correction in Bitcoin as well. But that's not really the case at the moment. We did have a slight stagnation recently, but overall, we can see that the M2 money supply continues to rise. Personally, I have also adjusted my exit strategy a bit according to the M2 money supply since I check it weekly. If I were to see that we really experience a bigger drop in the M2 money supply, then I would also start considering whether I should sell some altcoins or even Bitcoin. Because you can see for yourselves how closely Bitcoin sometimes moves in line with the M2 money supply. It's crazy. And that's why I've already partially adjusted my exit strategy accordingly. Another indicator is whether we see further inflows or outflows in the Bitcoin ETFs. Because usually, as long as we see inflows, things keep moving upwards. But it's only when the buyers start to fade that we see a bigger correction, because right now the Bitcoin spot ETFs are really pushing us up in the long term. And we're seeing further inflows here. And it doesn't look like that's going to stop anytime soon, which is really good. I honestly think that we can keep rising in the coming weeks based on this foundation, but also because Michael Saylor has bought more Bitcoins again. That's the advantage. The price of Bitcoin has risen so much. As a result, banks are willing to offer Michael Saylor even larger loans. And that's the thing again. The system behind it is just so ingenious, as long as the system doesn't collapse in on itself. If that happens, then we're really screwed, but it hasn't happened yet. The bubble just keeps getting bigger and bigger, which is, of course, positive for the price of Bitcoin. But as a result, we also have people here who have become a bit too powerful. In addition, in just the last 7 days, we've gained over $2.5 billion in stablecoins. By now, we have $250 billion just in stablecoins. That's the capital that's ready to be invested here. But that is not happening yet. And why isn't it happening yet? Because, of course, some are still waiting for confirmation, and this money could also flow more into altcoins, especially if we see the drop in Bitcoin dominance. We continue to see government bonds rising while stock markets are falling. And that's really intense, because it simply shows that we're seeing a huge loss of confidence, especially in the USA. Fears of inflation, people are afraid of a recession and so on. And that's actually not what Trump wanted to do here. And because of that, it's simply becoming more and more likely that the US itself will intervene soon. The US has to restore confidence. It can do that if they completely drop these tariffs, if they lower interest rates, if they start printing money. Yes, that would, of course, give the markets another boost. That's why it's a very interesting phase right now. And it looks like the US will slowly but surely have to intervene in the coming weeks, of course. Not today or tomorrow, but in the next weeks or months, because government bonds have really risen too sharply while the stock markets are falling. That shouldn't usually be the case. They will try to save the budget deficits here, and they'll do that by simply injecting more money into the markets, thereby restoring clarity. That will definitely be interesting. But in the long run, this also benefits us because it makes interest rate cuts more likely and also increases the likelihood of monetary expansion. We're also seeing solid inflows with the Ethereum ETFs. That's really, really nice, because that's been the big problem with Ethereum all along. In the past, we really didn't have any significant inflows here. So compared to Bitcoin, of course, the inflows are still small, but now it's almost 250 million per week, which is already quite substantial. That's already almost 1% of Ethereum's market cap, which is actually insanely huge, that we are now starting to see such significant inflows. But it's no surprise, because developer activity on Ethereum is currently reaching new all-time highs again. That's also great, because there's a big difference here compared to other blockchains. Solana has now become a major competitor to Ethereum, and Solana has really captured a large share of the market. But what is still clear is that the big institutional investors with large companies and so on still prefer to go with Ethereum and prefer to build on Ethereum. And we've especially seen that recently, which is very, very good and also benefits Ethereum. And in the long run, this will also benefit our altcoins, because Ethereum is, of course, the leader. When Ethereum performs, the altcoins can follow suit. That's why this is also good for our altcoins in the long term. That was another quick market update. We've covered the most important things. Feel free to leave me a like and a comment here for support. And then I'd say, see you next time, friends. Ciao.